My good friend Guy Johnson joins us right now from London. Guy, the range on cable, the high today 109.31, the low 103.50. What on earth?
I think the range is explained by the Bank of England, John. You can almost feel the energy emanating from the building over my left shoulder. They have a challenge now. What are they going to do in response to what we're seeing from the market? The market, John, is pushing. So you get the thin liquidity in the Asian session overnight. The pound plunges. Continues basically the move that we had out of Friday into the weekend. So we reopen in the Asian session. Low liquidity goes down sharply. Then markets start pricing and pushing the Bank of England. And that is what you're seeing in cable right now. You are basically seeing the market beginning to price what we're seeing in the gilt market, which is the Bank of England responding. And we've seen throughout the morning, headline after headline after headline. The market is now pricing the Bank of England to do X. Now it's X plus 1. Now it's X plus 2. The market is pushing the Bank of England. How does the Bank of England respond to this calmly? How does the Bank of England respond to this without looking like it's panicking? That, I suspect, is the question that is being asked and hopefully answered over my left shoulder at the Bank of England.
Guys, the domino after that interests me a whole lot more, and I know this is tremendously difficult to game out. What we've got here is the spiral that follows. You've got looser fiscal, which means tighter monetary. I'm trying to work out whether that means looser fiscal after that, and what the response of the government would be if the Bank of England validated what is currently priced.
So that I think is what changed over the weekend as well. You heard from the Chancellor, and the Chancellor seemed to imply that further tax cutting could happen. Now, would that further tax cutting happen in response to the Bank of England stabilising and the kind of spiral that you're talking about? But he certainly threw a little bit of extra gasoline on this fire over the weekend by suggesting that he is not done and that spiral could continue. The other challenge the Bank of England has as well is that if it were to curtail its QE, would it look like it is helping the government out and therefore effectively financing indirectly what the government is proposing? Huge questions for the Bank of England.
Massive debate right now, Guy, that we're all having with our guests on whether what we're seeing at the moment is just the required adjustment through higher yields and a weaker currency to attract capital to finance a big deficit, or something disorderly, the beginning of a self-fulfilling downward spiral as such. From the people you speak to, Guy, is it the former or the latter?
I don't think we know yet. But the balance is beginning to shift, isn't it? This doesn't feel orderly at this point. You haven't seen these kinds of moves for a very long time. As ever, John, the adjustment is one thing, A to B. It's how fast you get there, I think, is the real critical question. There is an argument to be said that this is a country that needs maybe a lower tax burden to encourage a more vibrant economy. Now, that's just the first step on a journey, but maybe that is required. But you are trying to introduce that into a fairly febrile market right now. We know that, which is why this becomes more challenging. So it's the scale and the speed of response, and I think it's the latter that I think is really interesting. This country clearly does need to make some changes. I think a lot of people would agree with that. How you do that and how quickly you do that is the question here. And I think that is what the Bank of England is going to be looking at very carefully. It's not necessarily the ultimate journey, it's how fast it takes the country to get there.